So let's talk about mortgage rates. If you are at all interested in real estate, you've been thinking about mortgage rates, they've been on your mind, they've certainly been on my mind. We are seeing posted bank rates above 7% for the first time in a long time. But I want to put that into historic context. 7% isn't crazy in a long period of time. For most of the 90s, in the 80s, it was much higher. 90s, 80s, 70s, 7% was a fairly normal interest rate. And even into the 2000s, we were seeing interest rates in the 5 and 6% for a number of years during my career. It wasn't until the last 10 years that we saw these historically low interest rates. And now we're seeing this shock at 7%. Having said that, 7%, and it's changing the market. How does it change the market? It changes the market by affordability. If the interest rate is higher, people can afford less home with the same mortgage payment or the same income that they're earning. So it definitely puts some downward pressure on prices, and there's no question that's one of the points of raising the interest rates, is that they're trying to curb this inflation and these crazy prices going up as quickly as they did. Now, rising interest rates have other effects and are changing the markets in other ways. They tend to make buyers more motivated to move more quickly because people want to get in and purchase before the interest rate goes up again. And that is changing market dynamics. But they're also affecting people's thinking and decision making, as people have to think about, if I buy this house now and when I go to refinance, the interest rate is even higher, which may or may not be the case. People need to be prepared for changes in interest rates, and that's factoring into people's thinking more than it did when interest rates were at 1, 2, and 3%. Finally, interest rates are affecting investment decisions without question. People buy investment real estate, so we're talking about multifamily, even duplexes, fourplexes. People buy these for the return on investment they get on the money that they put into the real estate. But now, with interest rates so high, there are all kinds of investments and guaranteed investments that are paying quite high interest rates, which is affecting the investment market. There's no question that these 7% and rising interest rates are reshaping real estate, the way real estate is sold, the way the market is acting, and the way people are thinking. If you're thinking about buying or selling real estate, my best advice to you is talk to a really, really good mortgage professional and explore all your options and the ramifications of your decisions. And talk to a really good real estate agent that's able to help you navigate this market today.